Good afternoon. This is Clark Neighbors with BIS Commodities with the market recap for the week ending April 24th, 2020. Another week gone by, another day gone by, and all these days and weeks seem to grind in the current scenario. Another somewhat confusing and tough week on the markets. Just kind of an update on how things traded this week. Corn into the wheat down 6 cents, beans down 2. Wheat was off about 3 cents. So you can see in the grain side, things were fairly stable, fairly quiet, but we did have decent sized trading range during the week. Cattle market down $3. Hogs up about 6.5. The energy market, though, was the talking point during the week, especially on Monday, when the lead contract, the May contract, actually went negative price, more than $30 late in the session on Monday. Very historic time. It's been a long time, if ever, seen any commodities go negative. So it bears showing the situation where as you approach deliveries and some people that were long those May contracts and then to basically pay somebody to help find storage in those situations. So a lack of storage in the energy trade, as you know, you can't just pile gasoline or crude products under temporary space. So very unique situation, and it stems into the ethanol trade, which stems into the grain trade, and really in our lifetimes we've never had a situation where price elasticity or inelasticity versus demand does not mean anything. In other words, right now it really doesn't matter if crude oil is 30 cents a gallon, or excuse me, if unleaded gas is 30 cents a gallon or $4.30 a gallon. Travel is very limited right now, so it's not having any impact. And because of that, price discovery becomes way more difficult. And I think that's what showed earlier in the week. As far as the grains are concerned, we're seeing some very good progress in plantings over this past week. We'll see where we are on Monday according to USDA. Far ahead of a year ago in most cases. Producers seem pleased on how the crop's going in. We should see some rains over the weekend, especially in the eastern corn belt, which may slow things down a touch. But as of this point, planting progress seems to be decent. One thing that filtered in the market midweek, some talk of some export trade, namely with China, and the idea is that China was going to build back the reserve program, somewhere in the range of 20 million metric tons of corn, 10 million metric tons of beans. As the week progressed, some of that optimism faded, especially in the corn, as quality issues with the U.S. crop from this past year's 2019-2020 crop. If China's putting those bushels into reserve, they want good quality corn, so that could have some impact there. As far as beans, most bean products are still cheaper out of the southern hemisphere, out of South America. At this point in the spot market, as we get closer to new crop, I think it makes sense for the Chinese to be a better buyer. So keep your eyes on that. That's one thing that kind of helps spark the market. Now keep in mind also on Monday when crude was having its meltdown, the nearby corn May contract reached 301 as a low. That is also the low from 2016. So we did hold that low technically. So that low may be in jeopardy as we go through later this spring, summer, or fall, depending on the size of the crop, etc. But at least at this point, technically that is held. Grain spreads very sporadic this week. First notice day against the May contract next week. That could have some influence on the spreads going into next week. Keep an eye on these new crop spreads right now. Bean spreads in the new crop are actually inverted from November forward. Assuming we have a good crop, I think those go back to carry, and continue to add carry in the new crop corn. Carries, spreads, if you will. I think you want to use 5-6 cents a month minimum as far as what you're going to see carries in this crop because of the potential size of the crop, carry out, demand, etc. Um, Another announcement that came out overnight, ADM announced they are going to idle two of their dry plants, one here in Cedar Rapids, one in Columbus, Nebraska. Those are the two biggest plants in the U.S. on the ethanol side. I believe the numbers right now, there's 71 plants idle, according to those that count that. And keep in mind, when we talk about energies and fuels, a third of the corn demand is biofuel. So that's obviously a big piece of the puzzle from a demand perspective going forward. Livestock trade, cattle and hogs, it continues to be a big challenge. For production at the packers, I believe there's like 12 packing plants in the U.S. shut down right now, but those are moving pieces. We're seeing one shut down, one come back up. So but we could battle this situation for another couple of weeks. It's starting to also have some major impact on product prices. Box beef is at record levels. Pork is seeing similar situations, so there's big margins by the packer right now, if not record margins by the packer right now. So keep in mind the producer of the meat's having issues, packers making good money, and on the backside, the consumer, because of the lack of available supply, may have to pay a premium at the grocery store. So we'll see the next few weeks how that plays out. The bottom line is, like anything else, until we get the country out and moving again, using gasoline, going back to more of a normal lifestyle, things are going to continue to be contracted. Again, delivery against the May contract this week, something to keep in mind. And the next major supply and demand update is on May the 12th. That also gives us an update, or the first glimpse of what the USDA is thinking in regards to the 2021 crop. Supply and demand update on that day too. Some are looking for this ethanol supply demand number to diminish, thus increasing carry out in the current crop year, especially on corn. With that, if you have any questions, feel free to call us at BIS Commodities. The phone number is 800-373-2525. With that, have a great weekend.